The way that fraudsters are targeting our consumers and businesses and our government to get everybody to push out payments to them, I think now is the time because we have to go where the fraudsters are. We're always going to be behind them because they're always looking for a new route. So we just have to follow them. And this is where they've gone. So this is where we need to go.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hello and welcome to Wrestling Payments. This is a podcast from the New England ACH Association. We are at the Payments Management Conference 2023. It is the 50th anniversary of NEACH. Yes, I just held up 10 fingers, but it is the 50th anniversary. I am here with Jordan Bennett from Nacha. We're going to have a real, I don't know what they used to say in wrestling world, but we're going to have a drawn-out argument, fight about what Nacha wants to do, and I'm going to play the role of the old timer, and I'm not going to like the changes, but we'll see how that works out.
I think most people are going to like the changes.
I
think
agree.
they will. I think it's time.
I do, but I got to play the role.
Let's play the role.
All right. So, Jordan, could you introduce yourself? Who are you?
So, my name is Jordan Bennett. I am a senior director of risk management at Nacha, and I have some neat jobs. Work on different risk management ideas, worked on the risk management framework. That was a big part of what I did last year. I work with the Risk Management Advisory Group, which is a group that really thinks about banking and ACH payments and how to manage risk on the ACH network, how to help our fellow financial institutions mitigate some of the things that are coming down the pike. It's it's a constant battle between fraudsters and banks and all the other parties in the ACH network. So we have to do everything we can and, work as a unit against the fraudsters. We put out best practices, we put out things that other banks can use and just try and give good advice.
So I have two questions. The relative question first is, where could they go? So you say that you put out a lot. Where do I go to get that?
To get that content?
Yeah.
You go to nacha.org and then look for the RMAG, the Risk Management Advisory Group, and then we put out links there.
Excellent, because part of it is knowing where to go, right?
Sure.
So many times I show someone a resource that, look, it's right here.
And it's got great best practices.
Excellent.
We try to put them out quite a few every year. Okay. I think last year we had about 10.
Oh,
So it's not quite once a month, but we put out articles as needed when something, good comes up.
Excellent. Nacha.org. Is there a specific RMAG section?
I don't know what the / is, but if you go to Nacha.org and look for RMAG, you'll find it.
Okay. Are you a blogger as well, or?
No. I mean, we title them blogs. They're blogs, articles.
Okay. All right.
Best practices, different things there.
All right. I get your articles. Okay. Yeah. Second, let's poke a little bit more. Where did you come from? I mean, do you come from banking?
Like everybody else that's in banking and risk management, we all came here directly, right? That was
that's
right.
Right
out of college. No, I started out selling toilets. That was my first job.
Right.
Then I went into subprime mortgages.
Oh.
And
was that the steps in?
That was the steps in, yeah.
Oh, nice.
And then now I'm in. Then I went to the Federal Reserve, and it was an interesting time. I started in 2005. And if you remember, that's right around the first frameworks that Nacha had. Mm-hmm. And so I was the new guy, and they were like, well, we've got this data. Let's have somebody analyze it. And so I got to do some really neat data analysis and working with third-party senders, trying to, monitor the return rates and put all that data together. Mm-hmm. That's how I got into it.
What fun. What Fed?
The Atlanta Fed.
Oh.
6 districts.
The place to be for payments.
The place to be for payments.
Nice. Excellent. I'm sorry, did I interrupt you?
No. It's just I just had a lot of fond memories of working in risk management, getting there by accident. Mm-hmm. I think how, honestly, most of us get there, right?
Yep. They didn't take the payments course in college.
Right.
But Fed Atlanta. That's, you need a pedigree to get in there. Good job.
It was a good place.
Yeah, good job. Good job. Good. Lots of things going on there.
Yeah.
Definitely should check them out. All right, so let's get into the. I'm just trying to get you off kilter,
Sure.
so I can attack your session. Describe your session here at the conference. What are you talking about?
So it's an education session, but we're also talking about the new rules proposals.
Mm-hmm.
So our framework came out in September of last year,
Mm-hmm.
and it is a very different framework than what we had in the first two. The first two, I believe, was 2005 and 2013, and in those frameworks, those were focused on debit fraud. And the fraudsters have realized that we have their number. The industry is doing a good job.
Mm-hmm.
We have got the tools in place to manage debit fraud. It's never going to go away. There's always going to be a fraudster attempting it, but they're not getting the money they were. We fixed it. I mean, it's not totally fixed.
Sure.
It never will be.
Never.
But we are we've done a good job.
Mm-hmm.
So fraudsters are going to go where they can get money. And that's credit push.
So as a I've been at NEACH for a very long time. Debit's really only where fraud takes place. What do you mean credit fraud?
So credit for push fraud it's becoming very common. It's an old scheme. It's been around for a long time,
Mm-hmm.
but it's really becoming much more problematic. These are schemes that entice an originator to send a credit to a receiver. So rather than the fraud taking place at the ODFI or
Mm-hmm.
at the origination, it's actually taking place at the receiver. The originator often thinks that it's a legitimate payment, which so it can be hard to stop, hard to identify by the ODFI. It can often be easier to identify by the RDFI because they might see a number of these payments come in. Think about payroll fraud.
Mm-hmm.
If a receiver is all of a sudden getting a bunch of different payrolls under a bunch of different names, that's a big red flag.
Mm-hmm.
And the ODFI can't see it because they're only missing one payment. They're only missing one payroll going out because it was misdirected.
Mm-hmm.
Whereas the RDFI is getting 5 or however many payrolls into an account that probably is either a new account or a mule account or shouldn't be receiving 5 payrolls, right?
Mm-hmm.
There's just red flags all over the place. And we're just saying, RDFI, let's look at these. Maybe there should be some responsibility here.
So I'm playing the role of the adversary.
Right.
But as you think about that, up until now, the ACH has been, the rules. So focus on the rules. If you're not a rules person, talk to a rules person. But the rules have been, I can post on an account number,
Mm-hmm.
and the ODFI takes all the warranties. They say this entry is authorized, it's going to the right place, I checked it, it's going, everything's fine with this entry. So as an RDFI, I go, that's okay, I got a credit. Credit's a credit.
But BSA AML doesn't let you do that either.
That's true.
Right.
That's
So
true.
we are just kind of bringing it in line to the expectations of what other organizations are asking.
Mm-hmm.
When you're an ODFI, you're always an RDFI. And there are so few just strictly RDFIs now.
That's pretty new.
You're on both sides.
Yeah,
You're on both sides.
Yeah, even a few years ago, we probably had, our membership is about 400.
Mm-hmm.
A couple of years ago, maybe had 130, maybe that we could not discern that they were originating. That's down to 60. So literally, everyone's an RDFI, but there are so many originators as well. So they are playing both sides.
Right. And if you're that RDFI and there's a fraudulent transactions coming in, it can mean one of 3 things, right? It means you've got a mule there.
Mm-hmm.
Your KYC didn't work and you've onboarded a fraudster, or you've gotten an account takeover.
Right.
And somebody is using that account without your account holder's permission. Is any of those 3 good?
No.
No, they're all terrible.
No. Yeah.
So as an RDFI, we don't want to let the fraudster win.
Mm-hmm.
We're not suggesting that we change the warranties.
Mm-hmm.
We're not saying you have to name match. But we do have one of the rules proposals is to format the name field. So if you do get a red flag and you choose to use name formatting, it'll be formatted the same way, or name matching. It'll be formatted the same way. Same thing with the payroll. When one of the rules proposals is to format all payroll entries as payroll in the company entry description.
Okay, so we are at a disadvantage here because Jordan hasn't gone on yet. But in other presentations, you do this all over the country.
I do, yes.
In other presentations, as you look, you just looked at the name. So the name change, it really is a change to format, how the name looks every time. So whether you're getting an entry.
So it's consistent.
Yes, exactly right. The second one is to identify a payroll item as a payroll item. I did joke a little bit, and I'm going to whisper here in case the mic doesn't hear it. 50 years. We really just got an entry description called payroll.
Right.
I mean, it's been a long time.
And when you're looking at our RFCs, our requests for comments, if you've got a good use case, we're looking for more. Mm-hmm. We'd like to put in other standard entries, entry class, different codes,
sure,
to make it easier to identify these. So if you've got a good one, we've been asking around. This is a start. We'll probably get more. And the easier it is to detect stuff, especially since we're asking the RDFI to look at incoming credits, mm-hmm. they need to have something that they can look at. Mm-hmm. If it's coming in 100 different ways, there's no way you can build automation into that.
I don't want to go off track too much,
sure,
but I'll go a little. I do think it's bigger than that because RTP, mm-hmm. FedNow, Wire are all moving to a standard that is going to clearly identify the name on an entry, and people are going to be able to screen that.
Right, and credit push fraud is much broader than ACH.
Right.
Any of the education materials that we put out, any of the best practices can be just broadly applied to any mm-hmm. credit push payments. Mm-hmm. It really is not just ACH. We're just one rail. Mm-hmm. And the fraudsters, they don't care how they get your money.
No,
they'll take it. If you send it to them into their bank account, they will spend it.
The point of least resistance?
Yeah.
So whatever's
if it's ACH, if it's any of the other ones, they'll take it. Yeah.
So from the other places that you've spoken, mm-hmm. in regard to the payroll, entry description, and the name changes, any feedback? Can you remember any specific?
No, yeah, of course. I really thought there was going to be a lot of resistance, mm-hmm. and people have said it's going to be hard, but they say it's worth it. Everybody has said now is the time.
Beautiful.
And this is coming from larger banks, smaller banks, everybody in between. Mm-hmm. I've gone out to a number of the Payment Association conferences, mm-hmm. and that's where I expected more resistance because it is smaller banks.
And nothing.
No,
nice.
They're happy. They think it's a tool that will help them. It's just like when we instituted the return rate thresholds. Mm-hmm. Do you remember how tough those were?
Yeah.
But man, the industry has done really well at combating fraud because of those return rate thresholds.
Sure, absolutely.
That's what we want to see again.
Yeah.
Right?
In an earlier podcast, I talked about. Oh no, it wasn't a podcast. We have a wall out there that goes through the history.
Yeah, I saw that.
Talked about Y2K. And, we met every week on Y2K, mm-hmm. how we're going to get ready for it, how much of a problem it was. Nothing. Yeah, nothing. So I can see that. So there's 7 different RFC requirements. I don't know if I can remember the rest of them. I can remember another one that I think is going to be embraced is a new use of a return code.
Yeah, so R17. Right now, the rules state you can return an item for any reason, just use the most appropriate return code. Mm-hmm. Most of the time right now for suspicious fraud, it is R17, mm-hmm. But we're going to word it so it is very specific. So banks have said, you came up with this framework, you're asking us to return stuff deemed suspicious. How do we do it? Mm-hmm. And so R17, that's going to be it. It's going to say suspicious. I don't remember the exact wording, but suspicious items,
I think they're going to love that. Yeah, I think they're going to love that.
Everybody's been very positive on that one.
And let's talk about the next one. And I'm going to have a lead into the next one.
Okay.
When a couple of years ago, you rolled out a new rule around authenticating new accounts mm-hmm. for web entries when you're using the account for the first time. Do you know what the number one question I would get after I trained on that?
What was that?
Why only web?
Yeah, right.
I don't know.
Yeah, well, we're not going as far as authentication requirements and everything else, but we do say commercially reasonable mm-hmm. is reasonable for everybody. There should be some commercially reasonable fraud detection. Mm-hmm. every participant, except for originators, consumer originators don't count.
Right.
As far as your third-party senders, your ODFIs, RDFIs, you should be doing something to prevent fraud. Doing nothing is not acceptable.
They were already asking why the exception. So now they get to apply it to everything. So that's great.
Good.
What else? What was left?
There is a big one for RDFIs to monitor credits, incoming credits.
Oh, yeah.
So that's going to be a little bit different, but again, it's not that far off from what BSA AML already required.
I think when you pile on that, most institutions are both originators and receivers, that it kind of lessens that. I don't want to say now's the time, but
with the twist and fraud, the way that fraudsters are targeting our consumers and businesses and our government to get everybody to push out payments to them, I think now is the time, because we have to go where the fraudsters are. We're always going to be behind them because they're always looking for a new route. So we just have to follow them, and this is where they've gone. So this is where we need to go.
I want to disagree. I can't really disagree.
I know. It's going to be challenging. It is going to be tough, right?
Yeah.
These are new requirements. It's a different way of thinking on the ACH network, but it's something we need to do, and I think the industry is ready for it. Hopefully, it's not just an echo chamber I've been sitting in, but so many.
You're right. I agree.
Yeah, I've been saying that now is the time. I think if we did this 5-10 years ago, we would have gotten a lot of pushback.
It'd be hard. Yeah.
But we're seeing the losses. At financial institutions, and we need to work as a team. Even though the ODFI is still going to warranty, that's not changing. We still have to work as a team to get the fraud out of the industry, and then chase it to wherever it goes next, right?
Yeah, no, absolutely, because they will. I fear for my check buddies that it's going to go back to check, but
it has. If you've seen recent headlines,
absolutely,
it is moving back to check.
Yeah, we the call volume has increased, so literally it is to find the weakest link and go that route. They hit our account. We have a credit only account.
Yeah.
No checks, never issued a check, never wrote a check. We felt pretty freely with that account because the bank said only credits go in this account. Checks came out. We got a copy of the checks. They were perfect.
Yeah.
They had the fractal number on it. They had the routing number. Everything. If you were looking at this check, you would not know that it wasn't our check.
Yeah.
I don't remember looking at the signature, but from a signature check, who checks a signature?
Yeah.
They were perfect checks. Thank God. The account, we have a credit only account. I don't know if that's universal, but
a lot of businesses do.
Yeah. At the end of the day, they say, "Was that a debit?" Who sends it back? So that saved us, but we would have got hit, and it was a perfect check. So yes, they will look for the weakest link. What did we cover? Like 4? There may be 2 others.
You're trying to make me remember them all?
Just the RFC ones. They couldn't have been a big deal because they're not standing out. The big ones that stood out were the credit monitoring, big change, the name stuff,
timing. So we're going to line that up with Reg CC.
Yes.
So if you feel that you need to do a little bit more research, you have some time. The Nacha rules are never going to exceed Reg CC, but you do have a little bit more time.
Right.
And to do that research.
To the point we said earlier about not being able to find the resource, that's another issue. Financial institutions generally aren't aware that they can say, whoa, we don't have to post this right now because we think that's suspect. And that's today.
That's today.
But you have to tell the ODFI.
Correct.
You have to inform the ODFI. It's right in the rule book. I think it may be even Article 1.
I don't remember.
Yeah, I think it may be Article 1. But it's in there now. It's an option to you right now. It already exists. This just, I think, rearranges a few things. You still have that default to Reg CC. If you're not familiar with Reg CC, it gives you the ability to post things. The after presentment, it gives you a day, at least a day, to do some research and ask some questions of why that credit's in there.
And the other big one is reversals. Right now, reversals are used strictly for errors. Failure to fund, not an error, only errors, but we are having a rules proposal for fraud. We want to give ODFIs an opportunity, every opportunity they can, to get that funding back to their originator, to get those dollars back. And if using a reversal can get the money back to the originator, let's try it. It'll still have the same 5-day window as an error, but
It's now an official.
It's an official way to do it.
Yes.
Yeah, as it hasn't been done outside the rules, and probably.
Depending on
sanctioned.
someone, a not guilty person here,
Right.
but depending on your interpretation of what was authorized.
Right.
But now it's official.
This is
not
all
squirrely.
proposals, and so
Yeah.
I believe
Would
you-
be, yeah.
would be right.
Yeah,
So
would be.
you guys have on June 2nd at 10 a.m. You have your own podcast. I think you're hosting, right?
So-
where you're going to talk about.
That's actually, I think, a town hall.
It is a town hall.
Me and Sean already recorded our podcast. Devin Marsh, out on the Nacha website, love Devin, good guy. He goes over the proposals in detail with Amy Morrison.
Yeah.
So that's available to you as well if you want to learn more about this. But we are, this is a full court press. What does everyone think? What edits do you want? One of the things about an RFC is this is the chance to say, stop, no.
Right. That's
Because-
what we want.
Yeah,
If this isn't exactly right, let's get it exactly right.
right. And
These ideas are the right way.
Mhm.
I really stand behind these. I think they're great ideas. But we have so many times that RFCs go out, we get comments back, and we change something to make it better, just tweak it to make it perfect.
Mhm.
And then that's what gets voted on.
Mhm.
So these are not the ones that are going to get voted on as is.
Mhm.
We are going to go through every single comment that comes in, and then we're going to make the necessary adjustments, and then the direct members and the payments associations will vote.
And that's the other side of this. This is the one chance to change something. They'll get it, work it, say, do we agree, disagree? We've got this from several different places. Let's talk about it a little bit more. I think you might get a little pushback on dates. I don't know.
And that's fine. If you can't do it, tell us.
Yeah. Yep.
Tell us what's reasonable.
Yeah, I guess my classification was different. My classification was questions I'm going to get on a rule proposal and, oh, yeah, good idea. So that reversal one was in the, yeah, good idea.
Yeah,
Yeah.
I like that one.
Yeah. All right. Anything else? So this is a career podcast about moving. What skills do I need to learn in an institution? What do I need to get ready for? Any tips on something someone in operations should be thinking about learning to get to the next level?
I'd say pay attention to what's going on in your organization and always do what's necessary. Go out and if you see something, you see a gap, fill it. That's kind of how I got to where I am in my career is they needed somebody to do that risk monitoring for the unauthorized stuff.
Yeah.
I filled that gap. It was fun. It was exciting. I didn't have to. It was a choice. They threw it out there, and I raised my hand, and I keep doing that. Just trying to find different gaps that the organization needs, and I always have fun doing it.
Excellent. And then we got you.
Yeah. Now I'm in
Praised you.
Nacha. Yeah.
Nice. Good place to be, Nacha.
It is
Very
a good place to be. I really enjoy.
Yeah,
working
yeah.
for Nacha.
Where are you going to go to the Federal Reserve Board next? You got a
No,
good...
I'm stuck in Nacha. I
Yeah?
like Nacha. I'll be here for a while.
Nacha's good. Good place to
Not
be stuck.
stuck, but,
Yeah,
yeah.
good place to be stuck.
Yeah.
And any final words? Anything?
No, I did want to. We did talk earlier about what's going to happen to ACH over the
Oh,
next 50 years.
What is
right?
going to? That's yes. We are at the 50th anniversary.
I
What's going to
do
happen?
think ACH is going to be around.
Mm-hmm.
What I would like to see, the Federal Reserve give us more settlement, access to settlement like some of the other payments rails, where we've got 24/7 settlement on FedNow.
Mm-hmm.
Opening ACH up to that, we can have more same-day windows.
All right. So I agree, but I'm going to play the adversary.
Sure.
Well, you have how many same day windows now?
We have 4 or 3 same days and the next day.
3 same days and the next day. When would the next window be? Why does it matter?
Well, it's so early right now on the Pacific Coast.
Yes.
People in California need an extra. They need an end of day closing, and if we could get that, which is beyond our current, settlement setup, it would be a big win for them. Just
What's
the
the
same way-
holdup for that?
It's the Federal Reserve.
How so?
Well, through the settlement, national settlement, we only have access to certain times.
So it closes. Is that what you're
Closes,
saying?
yes.
All right.
So if we could get greater access, settlement at different times of the day, ACH could offer an additional window.
You are not the first Nacha employee I've heard that from.
Yeah.
I think that
I think it's a drumbeat we're going down.
well, it wasn't anything. And then who was before Jane? I forget. Sorry,
Jan.
Jan.
Yeah.
Jan said, "Extend the window."
Yeah.
And I was like, "Oh, yeah, that's not a bad
Brilliant,
idea.
right?
Why not?"
Yeah.
Yeah,
Why
that
not?
was great. I remember when the same day came out, I was doing my homework, looking around the world for faster payments. There's someplace out in the Pacific that has 12 windows a day. 12 windows a day in some country that their payment system is batch, right? So like the ACH, but it's 12 windows. Wow, how could we have 12 windows?
I previously worked at the Federal Reserve and had good friends in development. And, it really is more about, it's not a technological issue.
Never is,
It's
right?
not, right.
Never
It's
is.
more of what we've decided as people, this is going to be the solution. But they could batch it however many times, it could be more than an hour. I'm not necessarily proposing that right now.
Sure.
But it's not a technological problem that we're saluted that we have.
And with FedNow, do you remember? Why do I think the hours did change recently a little bit?
No, FedNow is 24/7.
But I thought they changed net settlement. They added like an hour to it.
No, well, they're doing, and I'm not
Sure.
in that area, so
Sure.
I don't know exactly how it works. But they are offering a settlement solution while net settlement's down.
Okay.
So there is a solution in there that they're offering to that service.
Right.
And again, I don't know how it works, but I
Right,
know
sure.
we'd still like access to it. I'd like to learn more.
So as net settlement, just to get off track a little bit, net settlement works Monday to Friday, closes somewhere around 6 or 7:30, approximately. So if net settlement, say it didn't close, or
And
say
we could have access. We'd love to have access on Saturday, Sunday, and holidays.
right.
If you had ACH all those days, you could solve a lot of problems.
What do you think? So real question.
Yeah.
What do you think because when Jan said it the first time, it's like, yeah, why not? Why not?
Well, in the background, there's actually, and I used to work there in credit and risk management. I think that staffing up that area, because they're providing credit to all the different banks.
Yeah.
They're using
Sure.
the risk management tools to monitor banks, just like banks are monitoring their originators. I think there's probably some pushback there to staff those operations much longer, to staff, just staff professional folks in these different areas much more.
Is there anything? Do you think there's anything to? And we're really getting off track. And
But,
I don't know if
because
we're
it's
gonna
got to be
finish.
monitored. You can't just
Yeah.
have payments flowing without anybody there.
Right.
Because there are tools that the Fed is using to make sure, there's not big systemic risk going on. They walk out at 5:00 on Friday and then, just let everybody settle the whole time. Well, there could be issues there, right? So,
Yeah, I just wonder if it's. I think of it as a factory and hitting the button and all the lights coming down.
I mean, it's almost like that now, yeah.
Right. But
Yeah.
could the lights go on a weekend? I don't know.
I think so.
Is there, are they waiting for the cash to actually physically get somewhere?
No.
I don't know.
No.
It's really interesting. Why not? And certainly these decisions are probably
Well, about
board
me.
level.
Yeah.
So
Right.
I doubt they're going to be listening to my podcast, but
But they might.
They might.
Maybe you can influence them. Maybe we can influence them.
Yeah, I think you're fooling me.
I think
Yeah.
the Federal Reserve Bank of Boston is definitely a member of you guys, right?
Yes. Oh, absolutely.
Yeah,
Well, they're on our board as an advisor.
There. Well, give those advisors a listen.
Yeah, we're a new guy too.
Give a little advice back.
Yeah, excellent.
There you go.
Sounds like a plan. I'll go wrestle them.
Yeah,
All right. Well, thank you for joining us. Thank you for joining me.
sure.
We're at the Payments Management Conference 2023, our 50th anniversary. It's been a great show. You see things continue to change. This is the latest risk framework. Probably won't be the last risk
No,
framework.
not at all. They're every 5 to 10 years they come out.
So we look forward to them coming out in the future. 5 years, 10 years from now, we're going to see how these adapt to other payment channels because they're also evolving. But with that, if you like the episode, press all the buttons, flick all the flippers, and leave a comment, and we'd appreciate it. Thank you.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.